And good morning, everybody. Welcome to the Monday morning Hawkeye session. Today is Monday, December 21st, first day of winter. Entering the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is the live trading room and is for educational purposes only. No financial advice or recommendation will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose, and before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. And with that, we'll go to a chart. I don't really have any charts to really go too much. The last alert we had was at 2:45 this morning. And we did get a Euro Yen alert on our arrow. Let me take a look at that real quick before we go to the New Zealand Euro Yen. Things are still waking up for this morning. And yeah, we're going to pass on that one too. So right now, yeah, right. I have a feeling this is going to be kind of a really slow week this week. This is the week before Christmas. Everybody's already in Christmas mode. We're going to be here today and probably tomorrow. But other than that, then we're going to be taking the rest of the week off for the Christmas holidays and come back again next Monday and Tuesday. So having said that, let me switch screens here. And I said the last alert that I have was the New Zealand New Zealand USD at 2:45 this morning. And you see that was right before the London Open. And can everybody see my screen? Am I sharing?
Yep.
Okay. Yeah, I didn't see my little green band around my computer, so I wasn't sure.
I'm just talking soft so I don't wake the beast.
Yeah, okay. And we don't want to wake her up.
No, we don't.
So anyway, here's the New Zealand USD. There was on the yellow line. This was where the alert was. And one thing I've been looking at a lot lately is that when we get the overnight sessions, I look and see where the highest body of the candle, starting from this was from Sunday night to Monday morning, and to the lowest candle body before the London opens. And if that area is 50 pips or less, in this case it was 70 pips, which that disqualifies this as being a zone. So really that's, but this is the overnight London session. Overnight session. Here's London open. You see that London opened up and opened up down with the strength, or actually U.S. dollar strength on the downside. And right now it's coming right back up into what I'm looking at as being this sort of like the drop. Here's the base. Here's the drop. I'm looking for it to kind of retest this area right up in here. So actually, what I'm going to do is I'm going to make this a retest zone. And over here, this other vertical line I'm representing, this is basically where the U.S. Futures market opens up, which, as we've seen over and over again, that usually by 9 o'clock, we start seeing a nice little push just before 9 o'clock, before the 9 o'clock candle. And that's right when the futures, like the indexes and the golds and commodities from the Chicago Mercantile Exchange, that's when they open up around 9 o'clock in the morning. So we oftentimes see some little bit of a push just before the U.S. market opens up at 9:30. So we'll just use this as a retest zone. Maybe change the marking on that. Since it was since we had a range greater than that 70 pips, there really wasn't a range we could use for a breakout off of it. It did break out beyond that range, as you can see right here, but this was the candle that pretty much generated the low for that overnight session. So right now we really don't have anything to trade right now. We don't have an alert on any of our alerts right now system that I would consider to be tradable.
That's holiday week.
And it's a holiday week. So what I'd like to do this today is that if anybody has any questions of any type of things that we can discuss trading wise, feel free to open your mics, put something in the chat, anything we can clarify, any settings you want to go over. We're gonna make this. We usually have open mic Friday. We're gonna make it open mic Monday as well today. So if anybody has any questions, to just feel free, because right now I do not have any trades setting up that I can see. We can hunt for a couple, but anybody have any questions before we get too far into this?
Hey, Al, do you want me to, excuse me, do you want me to post the link for tonight's informational session too?
Yeah, let's do that.
All
Yeah,
three of those things tonight?
yeah, we have Brian in the room today. He's my partner in crime here, and he's on Christmas break, so he's able to join us this morning, which we're always happy to have Brian around. And he runs the session Monday evenings, his swing trading sessions, and he's going to be expanding that a little bit, I believe.
Yeah,
So,
going to touch a little bit on gearbox and variable, and then look at Arrow tonight too.
Do you have a screen you want to share?
No, yeah, I'm just going to put the link in the chat box for everybody.
Oh, okay, all right.
I have nothing because there's nothing really other than what I'm going to present tonight, which is results of the gearbox, a little bit of my learning from variable, and then Arrow being close to what I do on Monday nights manually anyway. So it's kind of cool.
Yeah, my gearbox over the weekend, my gearbox closed out all its trades that were opened up some new ones this morning, and so it's been doing really well. My variables was in a little bit of a drawdown last week, and it recovered everything and opened up some new trades today. So all in all, they're all doing pretty much what they're designed to do. And the Arrow, which is our alerting manual trading system, actually just generated with a gold trade. Let's see what that looks like. Maybe we can take a look at that. We don't generally talk about gold much here. It does have an alert. It does say to go short on it. Let's take a look at gold.
And that link is in the chat box now. And I'm also with Arrow. Obviously, we're doing 15-minute charts here, it looks like. I'm also testing it for swing, since that's more what I do. And pretty interesting. That's all I can.
Yeah. Right now with the Arrow, it's showing basically showing a supply zone way up here, a demand zone way down here. It said to go short right in this area. And I think this is let's see, to sell. Now on the Arrow, they use a 5-minute chart on the Arrow. And so if we're looking at a 5-minute, let's go and see what some of our other indicators may look like here. Let me go to 15-minute just to get a little bit better 15-minute reference here. And let me get to another chart and see what we're looking at.
Are you sharing that? Al?
I'm sharing. I should still be sharing.
Your trading view.
Yeah, you should see my trading view on my gold spot price.
Yep, there you go. Okay, I see it.
Okay.
I was on mine, but it was my trading view. That didn't show gold.
You've been gone too long, Brian.
I've been gone too long. Absolutely.
So we're going to take a look and see what it looks like where the 15-minute ranges are. Now here is where we had the alert on this big red candle coming down. So we're going to mark that. One thing I'm looking at is we have our moving averages. Let's see, where'd my arrow go? I lost my arrow. I'll flip this around. This was the arrow that we had the alert right there. We do have our 15-minute 62 up here. We have our 30-minute 62 above it. We have everything moving in the right direction. I think this could be a good short. I'm going to go ahead and accept that short. And we're only going for and basically with the Arrow, what we do with the gold is you go for I shoot for a $5 move for a target and a $10 move for a stop. And So right now we're still, everything's pointing down on our 5 minutes. Look at our RSIs. But right now what we have is we have let me just go, I'll put a trade on here just for reference purposes. I'm not taking any of these things live right now. I'm still working on getting comfortable with the program. But we'll take no, so I can't trade gold with this one. I can do a paper trade though. Let's see, move up. Change brokers, look for a new broker. See for the broker settings. I'm gonna go with paper trading. And I'm gonna try and catch this before it gets too far out of the way here. I'm gonna go gold, let's go sell. We're gonna just sell at market here with one quantity. I'm not sure what the quantity is on this system. We'll just go with one and see what happens here. We'll sell. And like I said, with this, we're looking at a $10 move. So when I put my targets in, I'm going to go with we got in, basically the alert came in at 1874. So we'll just back it up to that. We were a little bit late in getting into this thing. But 1874 was where the entry was. So 1874, so 1884 is going to be where the stop is. And then 5 pips target. So we got in 74, so going to 1869 for the target. We're going to modify that when it gets down to target. Well, right now we have a $10 stop, $10 target, or $5 target. And right now the bottom zone is right around 1862, which is going to be right about where this, let's see, where this blue line here. 1862 is all the way down below this blue line. So we're pretty much in the overshoot area of the blue line. Put my 15-minute lines on here. And so you're probably going to see us doing more and more of these arrow trades. There's a blue line right here at 1871 is our blue fib line on this. So I'm going to mark that. There's a blue, 15-minute blue. And we have a 15-minute green right up here. And right in between, we'll put all of our 5-minute fibs in there. That indicates our the third of that range, of the 15-minute range. You see this came right up. Right now it's bouncing right off that green 15. Had a nice little push down right to the blue line. So this was a red candle. And we are getting a little bit of a pullback on this. So a lot of times when these alerts come in, it's not real immediate. That oftentimes, a lot of times you can wait a little bit till it pulls back from where the alert. Basically, the alert candle. This was the alert candle. Generate the arrow on this candle. When this candle opened up, that's when you take the trade. So this was the projected entry of where we should have gotten in. So we got in a little bit late on this one. I just wanted to show you how this thing works. So this is where the entry. So basically, if you're right here, when the arrow comes in, you generates alert, take the trade short, and you're looking for 5 pips from all the way down to the 70. And actually, it came right down to your 5 pips. and it turned right around, came back again. But the ultimate target on this thing would be all the way down here to like the 1862 area, which is all the way down, and below this blue line, it's probably going to be like a 5-period overshoot. Here's our next 50-minute line. This is the undershoot of the blue line, and then we have an overshoot area on the other side of this. This is the undershoot, and this is the overshoot. All reference to the blue fib line right here. Now this is the blue line here. So this would be a red 15.
Mm-hmm.
I'll mark that.
I'm looking forward to combining Iris and Arrow at the same time.
Yeah, I think you're going to really like that. It's going to fit right into your trade plan that you've been doing for
Right
the last
over the
several
top.
years.
Almost like a layer of two tools.
Yeah. So, but this thing still is to drop the base, and that would not be. I mean, the anticipation is it's going to drop further down into here. We never know for sure, but we can project some things. We project things not with the idea that it's going to be always going to be true, but we use it as a part of the plan. Here's our nice move. Here's our nice move down. Here's our 30 to. Here's our 50% retracement right here. If it comes up into this yellow line, that's a 50% retracement of this down move. And so this would be a nice little area to maybe try and take it short. We had the alert. We're having to pull back. We're getting a little bit better entry than where we first were alerted the trade. And then down here is right here is your 7821 period, or 78 the range for this base drop. And so this would be the nice little area where you could look for a target area for it. We do still have weakness on the RSIs. And that's still confirmed on the on some of my other indicators that we use. Any questions so far? You see, it's a nice look. See, this thing just pulled back 50% of this down range. It just pulled back 50%. Right here, you can read the 50% right here. If it was a 40% pullback, it'd be pretty much right here. This is where the 38.2 and 40% line is, right here off of this little dot, right here off the trend line. And if it were like a 60% retracement, it'd be all the way up where I align the 61.8 right with the bottom. And then this yellow to red zone would be the yellow bar is basically where the 60% retracement would be. And this would be the next higher percentage. These are 11, basically 10% apart here. Right now, a nice little 50% pullback. And like I said, if you were to, if you had this alert and you saw this pullback like that, this would be a good place to try and take it short. Give you a little bit extra wiggle room for your target. And maybe I'll reach that target just a little bit better. You can actually, the 5 pips from the top of this red candle, from the body of this red candle to the wick, I think probably was just about a $5 move on this gold. Pretty close. Almost $4.50. Like I said, with the arrow that on the gold and if you trade the gold and trade the indexes, you're doing that off of a 5-minute chart. And let's see, do we have any? Still don't have any new alerts. So I think this could be a very slow Monday morning on the alerting system. We can we'll keep an eye on this one just since we kind of played this one a little bit. Let's go to our correlator, our price, our currency correlator, and see which ones are strong and which ones are weak. On the 4-hour chart, this is the 3-hour chart, and we see the dollar is strong on the 3-hour, but it's pretty weak on the 30, the 15, and the 5. So I would not want to be trading this thing to the dollar strength right now because it's really showing weakness on the other lower time frames. The yen looks like it's got a lot of strength on the 4-hour, 30-minute, 15, and 5. So I would be looking at a yen pair trading to the strength of the yen. And if you look at this, like the US yen, looks like it would be a good option. The yen is strong, the US dollar is weak. Let's go take a look at the US yen, see if we can find something there. So we go over here to the US yen. Let me get a yen pair up here if I can get my yen chart. And that's fine. I'm trying to get my 3-digit numbers here, so I'm change that screen. US yen. Okay, remember we said that trading to the dollar strength or the yen strength. So the yen is the second currency of the pair of the US yen. So trading to the dollar to the yen strength. You see it's coming right down, looking like it's going to start coming in to bounce off this 30-minute 62. Here's a 15-minute. Let me make sure my charts are in the right order. 15, 5, and 1. 30-minute 62. We're looking at a 30-minute 62 bounce. We're trying to figure out where our all of our moving averages are pretty much in the right order, except for this one. It's got to bounce through. So right now, to me, this looks like this is going to be a bounce area. I would not want to take it short right now because it's coming right into an area where it generally will bounce, especially off of this 30-minute 62 area. So having said that, we'll draw our Fibonacci, our 15-minute fib lines, and note them. So here's 15. And let's see, this is probably the 15 right here. See, that's on, make sure I got the right chart up. So this should be a 15-minute green. That looks right. So we have our blue, green, red. And we'll come over here to our 5-minute chart and put the 5-minute periods in. Make sure they're right. It's bouncing right off of a 5-period red here. Change that. Now, once this thing gets down here and we start seeing these starting to, if we can get the bounce off of this, we get a crossover. We're looking at pass and check, passing the red 5, come back up, check it, see if it holds. If it holds, we may want to try and take a short down here. But let's just keep an eye on what our strength is. Everything is on the 15, the 5, and the 1. Everything is buried down here in the 89 and 75 area. If we can get a little bit of a pullback off this 1 minute or off the 5-minute and get to hook before it crosses over the 50 and 60 area, we might have an area as a pullback for another short to reattempt this, see if it can bounce through, break through this 30-minute 62 area. And I go to another chart to double check some other indicators that I have available to me. And this is the US yen that we're looking at. Yeah, right now I would be waiting for a little bit of a pullback. Guess maybe a little bit of a flag pattern, a little bit of a wedge, and then maybe possibly be able to take it short. We still do not have any alerts. While we're waiting on this, let's check and see how our gold's doing. Gold's pulling back a little bit. It hasn't broken through the top of this area. We did get a nice bounce. This was bounced off of our 15-minute 60 the 15-minute fib line. This could give us a little bit of a fake out here. This one, we may take a little heat on this one. And the trade may have been just to get out right when we got the alert come down where it bounced off of that. That gave us pretty close to our $5 move.
It's so funny just watching some of the different tools. I'm so tempted to take whenever it hits a $5 mark just to take it because you don't really know what's going to happen this week.
Yeah.
I'm talking to Gearbox, I'm looking at Variable. I'm talking about all of them. Just when I hit that $5, I'm almost closing out and take the $5 and run.
Yeah. I've never lost money taking profits early. I've left some on the table, but I've never lost any money taking profits early.
It's funny. I just did it. I took $4 off. And this is a long, but I'm on the 4-hour chart, so it's not a big deal.
So right now, this thing is it's just coming back to retest where this it's going to come up and retest this 30-minute or this 15-minute or the 5-minute 62. We have the 30-minute up here. As we look at the overall picture of this thing, we did have a nice move down overnight. Let's see, whereas the London session was right over in this area. At 3 o'clock is when London opens, U.S. time. That's 3 o'clock East Coast time. Those of you who are in the East Coast or New York time zone.
This is one of those weeks where it's good just to kind of catch up on your trade plan, what your plans for next year, making sure all your documentation's in order for the end of the year taxes. It's one of those kind of next week or so is going to be like that.
Yeah, take the time to do a lot of your administrative work.
Right.
And don't forget, for anybody who is trading with money, now if you're in Canada, which I know some of our people are, it probably doesn't affect you, but if you're in the United States and you have over $10,000 combined in any foreign bank account, you are required by law to give a FATCA report. It doesn't cost anything. It doesn't have any consequences on your taxes, but it does make a difference because if you have those accounts and you don't report the fact that you have those accounts to the U.S. government, they could confiscate the money that you have in it.
Yeah.
They don't charge you tax on it. It's not a big deal to report it. They just want to know that you have it. Don't like it, but that's the way it is, unfortunately.
It is the way you have to play the game.
Yeah, and we have information on how to find that information. If you have less than $10,000 combined, like if you have 3 accounts with, $2,000 in one and $4,000 in another, and $5,000 in another account, you still need to report it. This is a nice little strong pullback. This was this could be, let's see where we at here on this one. This is the gold. We do have a trend line off this gold. Here's our high. Here's our pivot. Let's extend that a little bit. It's coming right up to retest this trend line right here. I expect a little bit more of a pullback. This is like an A, B C move, I still expect it to come on down lower. I see we are taking some heat on this, but I'm still okay with staying in this trade. We have a couple barriers here, some rebar in the wall. We got the 5 minutes 62, 30 minutes 62, and we have this trend line, which this is basically the third hit on this trend line. So here's the anchor, here's the hit, here's the confirmation. So I would say right now this trend line has been confirmed as being a confirmed trend line. This is the third hit on the trend line, which oftentimes leads to the next bigger move to the downside in this case. And if I were to be drawing a harmonic on this, I'd be looking at this being our A. Let's see. I would just eyeballing this a little bit. I'd be looking at a harmonic pattern, which we've talked a little bit about. Here's our X. Here's our, this is the big move. Here's the B, which is the pullback, which is about the 50% pullback. Here's our C area, which oftentimes will stay just a little above where the A is, and oftentimes you'll find out it'll fall right on a Fibonacci line, and then the target would be up here then. But we have to get this little pullback here first and then bounce before it goes back up again. And then usually like the X to B area would be the trend line that it needs to, if it breaks and close it. Now it did close above it, so that from the B, but this B is, you can almost move this B area over to, I like to keep up a little bit higher, probably equal to where this area is. I like this high is a little bit better. Here's the pivot right there on that one. You'll find out with these arrow indications, alerts that we get, you'll find out that they usually have, quite a significantly higher stop area than what we've been doing mostly with these wedges. That doesn't mean you can't find your own little wedge off of these alerts and draw your own wedge to maybe tighten up your stop and maybe exceed your target a little bit. But this is pretty much the conservative area where they give, in this case, they give a $10 move on the gold for a stop and just going for a $5 target, just pretty much just scalping that. It's a 2-to-1, it'd be a 2-to-1 loss, but the odds, but your ratio of wins with that type of a stop range is significantly, it's pretty high. But you have to plan your trades and take positions according to like a 40 pip stop out. Normally, like on the currency pairs, as opposed to what we generally look at a 10 to 12 pip stop. And go back to our Japanese yen trade, or the yen that we're looking at. And so this is one that we sort of found with our correlator. A nice little drop, little base drop. Going to retest this 30 minute 62. Retest the 5 period Fibonacci. Came down, hit it, bounced back. Hit it again, bounce back. Hit it again, bounce back. We're just forming a nice little wedge right in this area. Actually, there was another little wedge right in this area, right in here. There was another little wedge. Here's a pullback. Let's see if it retests, if it breaks to the bottom of the B. And see where our RCS tool is right now. It's still showing the yen as being stronger on the 15, but it's starting to weaken a little bit on your 5 and your 1 period.
A breakout.
It might be. It could possibly breaking out. This does showing a little bit of strength there. This again, this is our 1 minute chart. I still like to see a break through the B area. So this is just one we found with the tools that we have. When we don't get any alerts, we go looking for some.
Man, I was hoping this would take off up.
Well, it still might. It still hasn't broken through the B. This could oftentimes this is oftentimes the head fake we often look at. It breaks through as a nice move down. I still would not take this trade because we're not that far from the 30-minute 62, which we still haven't actually got the bounce off of that yet. I look at this. I'm seeing this as being almost more of a trap area. Now we do have the moving averages. Let me go on, clean this one up a little bit. We do have the moving averages in the right direction from the 5 and the 13 have crossed over here, but we still have to get through this little area between the 16 and the 30-minute, 15 and the 30-minute 62. So we do have a little bit, and it's right here at a fib line that hasn't been, that just barely getting broken, not with a lot of strength. If we go to a higher time frame, see where a higher trend line would be. Be looking at, it did break this trend line right here. If we had drew a trend line from this pivot low, here's the anchor, here's a hit, here's another hit. Now it did break this trend right here, but it's coming right into this area. That's our 15-minute chart. Let me get over to the 5 minutes, see if we can find something that might be. Sometimes a 15-minute just takes a little bit. It's just a little bit too big of a range for what we trade sometimes, other than the fact it gives us the direction, which is a big point of it. But we see here's the, let's see, we had it down. Let's see, well, here's really the bottom of where the down move was. If we look at our overnight range, let's see where overnight range is. Put our fib lines on, or range breaks. That's there. Let's see, where are they? Oh, here it is, right over here. This was Sunday's move. Here's the London Open. Right there is a London Open. So this was a Sunday range. There's the low. Here's the high. Here's our range box. You see we're just getting the bounce off the 30-minute 62. We had the pass. Now it's coming back up to recheck the 5-minute red fib line. Here's a pass, coming back up to recheck it. Bounced off the 30-minute. Showing strength here on the 1-minute. Everything's still buried over on the 15. So right now I'm looking at for a pullback. I don't know if there's enough room here to take the trade or not.
I was thinking the same thing just as you were getting ready to say it.
So you only have 5 pips. And I said, unless I have at least 12 or 14, I'm really not interested in taking the trade. I like to see a pullback pretty much up to retest this upper wedge here, which is the trend line I drew from over in this area off the 15. If it were to come up and retest that, then I might be willing to take it short. We do have everything moving down. Or if it comes up and retests the 15-minute 62, because right now it's in this range right in here. So I'm going to mark that so we can see it on the other charts. So here's our 15-minute 62 period moving average. It's coming right up here. So if it comes up and retests that area, it could be a possibility to take it short. Or if we get this hook with the RSIs and we get the close below, then you can maybe take another shot at it and use that for a stop. I want to see this thing close down though. Let's see a close on that. And so we do have some weakness to the dollar against the yen. If we can get a close below this 30-minute 62 as this thing flattens out, then our target could be down here. That will give you 7 pips, maybe hopefully get maybe an overshoot. But you're gonna have to work at it a little bit to get your pips out of there. Like I said, this is a trade that we're looking at, that we sort of found off the books ourselves with our RCS tool that we use with looking at the correlator of all the other, how the other pairs correlated with this. And you're seeing that the yen was all the way up here before on all 3 of these. Now it's sort of losing ground. So you're losing the strength on the reference strength. We have a strength by 3 on the 15 or on the 30 and the 15. We have basically 3. The dollar is pretty much now showing being the weakest of all the currencies. So we still don't want to be trading to any strength of the dollar. And you see it's 8:47, so we are coming up on our 9 o'clock hour.
But I'm just not expecting a whole lot to happen.
No, as any
banks
trades
are just
are
closing out paperwork, and they're not going to. Your 401ks and mutual funds and all those stocks are pretty well set for the year.
Yeah, they've already taken their profits. They've already locked in their profits for the year, and now they're starting to position themselves for next year.
Yeah, they're just doing their paperwork. And so all the stuff that we're probably seeing is just the average, novice, intermediate type trader, no big money.
There's no, you don't have the volatility or the velocity of the money going in right now.
Right. So now you really need to understand the mindset of traders and knowing that most of them are wrong. That's why it's good to have the tools to kind of help you, because it does monitor human behavior.
Brian, have you heard any reports anything about how the Christmas spending has been this year nationwide, or
From what I've read, we are down 50% compared to last year.
50%? So
that's going to hit us in January and February, right when the election's taking place. And,
yeah, with so many people being out of work because of this COVID thing, and so many businesses basically really struggling, it doesn't surprise me that the spending for Christmas and holidays this year is going to be at probably a 10-year low. I'm going to presume.
Would surprise me. You also have the conservative half of the United States, at least, and of course we're not talking globally, talking half the United States thinking, we're going to socialism, so they've gone into savings mode. And there's elements of truth to that. I mean, I don't know how fast that could happen. I'm not into that, but we've had some discussions recently about even the people who didn't like Trump but didn't really care for Biden, how they chose Biden just because they didn't think it could go socialist that fast. However, they're now regretting it because they're seeing things happening.
Yeah, it's going to happen day one. One thing that we have to pay attention to is what they call the velocity of money. And that is that when a dollar is spent, it oftentimes gets spent 2 or 3 different times. For example, let's say you go to a restaurant and you buy a meal and you spend $1 and you tip the waitress or waiter their tip, and the waiter or waitress goes and they call the cab to get home. So that dollar that you spent, you gave to the waiter or waitress, they take that dollar that you gave them for a tip and they give it to the cab driver that takes them home. The cab driver uses it to go and buy some groceries for his family. Well, that $1 has some velocity. It had the velocity of it bought it bought a cab ride for the waiter. It bought some groceries for the cab driver. So that $1 has some velocity behind it. But now what happens is if you have people that have $1, and rather than spending it, they put it in their bank account and save it, there's no velocity to the money. And and it's the velocity that keeps the economy going. It's not so much the savings that keeps it going, it's the velocity that keeps it going. And we're going to lose a lot of the, and we're going to be losing a lot of the
you're
velocity.
talking about velocity that can be used also in trading.
Exactly.
So you don't have to just save your money and sit on it. You can actually use it to compound.
Yeah.
Which still goes into that velocity number.
But if you have it just sit in the bank account where it's drawing 2% or 1% year interest, there's no velocity to it.
And somebody else is making a whole lot more money. Matter of fact, I was talking to Kim. She saved $20 on something she purchased if she would just got a credit card. And I got the statement that she signed up for, and I looked at the interest rate that the credit card is charging on a normal basis. It's 25%. So when we're getting 2% on our savings at best annually, the credit debtors are getting up to 25. That could lead to a severe debt problem if you have a spending problem. And you'll find a lot of bankruptcy starting to happen because they can't handle it. 25% is a lot.
Well, and also keep an eye on your bank accounts and just start watching for a negative interest rate where they're going to start charging you money to keep your money in your bank. That's not too far down the road.
And that's another good thing why we're talking tonight about the various tools that you can have that don't have to be sitting in a bank account, and you don't have to be crazy risky.
I will say I've been very happy with the results I'm seeing with Gearbox. I'm happy with the results I'm seeing from Variable, and I'm also happy with the results I'm seeing with just the manual trading that we're looking at. Iris has been kind of a, a whipsaw a little bit because we haven't been getting the movements like we used to 3 months ago because things have just kind of tightened up.
Very much
But
uncertainty.
some of these other programs that we have, they're kind of geared towards a very narrow trading market, and they can still eke out their little a couple of dollars here, a couple of dollars there, but it's doing it while you're sleeping. So it's kind of nice that you don't have to be paying as close of attention to it. And it's just another stream of income that I'm using to generate growth throughout my accounts. And you have it somewhat diversified. You have a little bit here, a little bit there, and we'll get some drawdown, which is part of the trading game. You need that drawdown in order to get the snapbacks that give you that profit factor. And see, this is one reason why I really was hesitant about, because you see how it came out, it broke, but actually did a pass on this strong move down, came back up, retested, came back out, got a lower low, but it still hasn't really been able to close significantly below this 30 period moving average. It's just sort of trading inside. It broke out of a box, but just trading with a very narrow range right here. And it's just real hard to, when you have a 1.5 point spread and you have buys of the candles are only 3 pips apart, it's pretty hard to make any profit out of that. Let's see how our gold is doing here. Came up, it tagged the 30-minute 62. Let me take this, clean this up. Came up, it hasn't quite tagged the 30-minute 62, but it's certainly having to get through that. And right now it came up right here to where this B is. We might get a little bit, this thing could go up and possibly stop us out here. The thing is, it still hasn't really come down to set the C part of this, what I would call this harmonic. And this is just a projected harmonic.
Gold, right?
This is the gold, yeah. This is a projected harmonic. This is not a drawn harmonic. But what I oftentimes look at for the strong move down, the retrace, come back down to retest this area, not to break it, but to retest it. And that kind of gives you your wave 1, your wave 2, and then you look for your wave 3, which is coming up here where the D is going to be.
It's strange that you said this because I'm looking at the 1 hour gold and with the arrow swing trading, and we just bounced from a supply that was weak. And then we dropped all the way down just below, just near a support area that's rated 1. It's bounced up to the moving average, and it just gave me a signal to go short. I'm not so sure I'd go short, but it's kind of in the halfway point.
Yeah, I do like drawing the harmonics a little bit more room than what oftentimes what you're going to see is you're going to see this a harmonic at the end of a big move off of a higher time frame. And we really don't have that yet on this. I would expect to see it more down below here. And this isn't what I call a huge move, but it's off an hourly chart where you would have like your X being up here rather than closer down. Here's your A. We're still working on the B pullback, which is you'd be looking at right there would be a 50% pullback. Well, we're still right at the 50. Let's go with a 61.8% pullback, which you still haven't reached that point yet. There's 61.8. Here's how you measure that from here to here. This tells you the percentage of this move down to where the B is, for B projection. C coming down to where that would be 100% retracement of this move, but we're going to move that up a little bit to about 88%. And then once that C is set, then we're looking at the target, but we need to have across this trend line. So when we see this move come down, form our C, stable, cross the XB trend line, and then looking for that to target the D. But right now, the harmonic is still being formed. It's not anything, but that's just a projection. I'm looking to see, like, here's our 62. I'll mark that where the B is. I expect to bounce off of that. Here's where we got the arrow. And our stop is still way up in this area. I think we're still there. And see, again, still no alerts yet.
That's real
9
quiet.
o'clock. We
But that would be expected.
Yeah, we may get something here at 9 o'clock, possibly.
A little bit more volatility at that time.
But right now, I'm looking at, we have this trend line right here. We have an anchor. Here's the hit. We had the break. Here was another hit. It bounced, came out, broke through. Now it's looking to retest this area. From a higher time frame standpoint, I'm looking to see, is it trending and which way is it trending? And we had a nice move down. Let's get over to a higher time frame. Let's put it on a 3 hour and see what that looks. See what that trend looks like. You see here's a drop, strong base, and here's a lot of days where it stayed in a certain range. Now it broke down below. Now it's coming back up to retest this area up in here a little bit. This is really the move. This was a 1, 2, 3, 4, 5, 6. This is a move from the last week and a half. Found its bottom. This one may work here on this one. There's our 50, there's our 57% retracement. 61A is going to be right up about in, right about in there, 62. Here's our green fib line. There's our 85% right there. And then come on up here to retest somewhere around the blue fib line. And a lot of times you can just draw these from fib line to fib line, overshoot to overshoot, and get a pretty good picture about what this thing's going to do. You don't want to, you want to project it. You don't want to plan. You want to know that it can be there. You don't want to trade it until you see it actually develop. Or you have some other indicator system that allows you, that tells you to get into the trade. This looks like a nice little pullback on here. Still has a 62 it's got to get through, but once this thing consolidates, and right now you see it, all these moving averages are starting to consolidate. We got the 5, the 13, the 1 hour 62, the 30-minute 62. It's all right here inside the, you can see they're all right inside this overnight box that we drew earlier. Once they get consolidated, once they start breaking out, then you're going to be looking for that. That's when it's going to, you're going to start seeing the race to this area down in here. Any news that we have today? Let's see if we have any news. I don't think we do. Nothing significant that I saw earlier. It's December 21st. Nothing red here. It's up at 8:30. Final GDP. Not a real significant announcement. And really nothing until, this is Wednesday, this is Tuesday, Monday. Nothing really on Monday. Tomorrow we have a little bit. That's it tomorrow at 8:30. Again, I don't see any red folders at all this week.
Because everybody's closed.
Everybody's closed. Everybody's, like I said, everybody's heading off for vacation. Taking time off for the end of the year. As we will be doing.
Next break.
Get back on our 5-minute chart, our 15-minute chart. You see it's starting to form a little bit of a wedge right here inside of this 1530 area, 62 moving average. If we can get the break there, then we probably will looking at a little run for the 15-minute fib line. you can see how price came up. We tested this red 5-minute red fib line seems to be a number that it seems to like. It comes up, bounces off, comes up, retests it, breaks it, comes back, retests it, breaks it, come back, retest it. So this area right in here seems to be a very popular area for this thing to be a magnet. It's like a magnet coming back into this area right in here, which is basically your overshoot and undershoot area of your 5-minute fib line. So we draw the fib line. There's the 5-minute. Let's find out where a 2-minute is so we can maybe check that out. Now, this is on the yen, so oftentimes you don't really look at the 2-minute too much, but it's there. Here's the red line. So here's the 5, here's the 2, here's a red. This would be the overshoot coming in from the up, from high to low. This is the overshoot area. And then we look at the undershoot area, which is basically, actually this seems to be the area that it seems to like, just coming over this area. Here's a wick, came right down into it, rejected it. Came right down, it's rejecting it. Came up here, broke through it just a little bit, rejected it. Came up here, rejected it. And you could extend the zone right all the way up into this area. And even so, when you're looking at this area here, it's only looking at, it's only a 7-pip range. You see, even if you try and get half of it out of it, you're only getting 3 pips out of it. Any questions, comments, anything you'd like to look, any pairs you'd like to look? If you do, just type it into the question and answer box or the chat box.
Take a look at the U.S. Swiss.
U.S. Swiss, okay.
Yeah, just looking at something as I was reading something on the U.S. Swiss as you were talking. I just don't know how long it's going to hold, but get over here so I can see what you're looking at.
15.501, here we go. All of our moving averages are still kind of, they're in the consolidation mode right here. Yeah. Here's the 13. We have the 13, 513 cross coming in right here. Again, same scenario. We have the 15-minute 62 and the 30-minute 62 all kind of right here within, well, let's see what's the range on that.
The key that I'm looking at, Al, on this particular one is we've been in a downtrend for a long time with this. And majority of traders are actually long, which is crazy. Take a quick glance. Yeah, take a quick glance of the 4-hour of the daily.
Yeah, let's look at it. This several weeks.
Oh, you go back to daily.
Pretty much all this, pretty much all month.
It's been for a long time of heading downward, where majority of the traders are actually long. However, it is coming to a place where it looks like even the moving average are wanting to flatten out. That's partly because the end of the year. I believe this thing's still going to go down, but you may see a nice little bounce back up to the 90 area. And
here.
Yeah, somewhere in that area.
Here's 89.
So when we're looking for,
you're looking at blue line to blue line here pretty much, aren't we?
Yeah, this is what we teach on Monday nights in the manual with the fib tool and stuff like that. We're coming into a blue line, and we want to trade it between blue line to blue line. My bet is that they're wanting to, we got a little ways to go down, but you're wanting to, the green line's dead on of where I would think it would go back up to. So when we're looking at a daily chart and we're thinking, okay, where can we go with this thing? And then we drop down to that nice 15-minute. We do have room to move up. Just understand that the overall push on this is down. Majority of traders, and we're talking a large majority of traders, have been long this pair for a long time. And that's why I always say that I always go opposite of what the crowd is doing, because there's a lot of people who said this can't go any further down, and it keeps going down. Now we do see some buildup of flatness at the bottom here the last 6, 7 days, but that's holiday. I mean, you're talking from Thanksgiving, it really hasn't done a whole lot. The Thanksgiving holiday, and you'll see that across the pairs. You'll see this flattening out.
There's this daily candle here. It's a nice blue, strong blue candle that was rejected right off of this level right here at the 88 level.
And that, that could be an institution clearing out or buying in or something. But it's really not. It's being rejected because your wick length is just the same size as your body length. And so it's not like this is a major push. So it looks like the previous 4 or 5 days. It really hasn't done anything. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days, 2 weeks. That one candle is just a picture of the last 2 weeks.
This one candle right here.
Yeah.
Yeah.
That's all it is. And now it's being forced back down. So all those buyers who thought, oh, this is it, there's a good chance before the year's up that they're going to get out, and that thing's going to go a little bit further down.
What's interesting as I look at this too is that if you look at just the wicks from right here, this is right where this thing came right up into these wicks. It came right up and it was rejected.
And you can actually see a wedge pattern in this with the flat top.
Yep. And so if we draw a wedge,
that may not be recognized by AIRIS, but as we build our experience with AIRIS and the wedge, we can see that you can definitely see I would almost go with a flat top descending on the bottom.
This is the range that we were looking at before this candle down came up, retested this area.
Yeah, that would be it. You got your descending on the top.
Yeah.
And you could even, just like that, I like that one right there. I mean, that's probably a better one than I saw with my own eyes. But you've got, if it breaks below that BD line, you really don't have a whole lot stopping it. Historically, you got whole numbers and quarters like the 87.5, 87, those whole numbers. But we're also looking at a daily chart.
Let's look and see how far back this goes that would break this area. Let's just go back to a weekly. Nothing over here all the way back to May of 19. Let's go back to
you're going to have to go months back.
Yeah, you have to go months back, and you're not. Yeah. So right here, you can see this is really where it's looking.
Right.
This is a low that it's looking at right here to where it's going to. Here are your wicks. This is the origin of the move. Yeah. This was all the way back in. This is 6 years ago. It hasn't reached this level for 6 years.
Go ahead. It's actually 2015, I believe, if I was looking at it correctly. Go ahead and squinch that up even a little bit more. Oh, there is more.
Oh, gosh, there's another one here.
Draw it down. Squint. Yeah. Now look at this, guys. We put your cursor on 2019, Al.
2019, which would be right in this area.
A little bit to your right.
Right. Oh,
right-ish, right about there.
Oh, the high there.
I have notations that's where the SSI, which is Speculative Sentiment Index, was right around 1. There was no real clarity of where it was going. It wasn't until we got into the early 2020s, late 19, that the number actually flipped. And this is before COVID kicked in. That the Swiss was predominantly being held long, and SSI said to be short. And it's really been months that this thing has been going down, and months that people said they would be more apt to buy than sell, and there is no reason why.
Well, the only reason I could think of why they'd be more apt to buy than sell was because the Swiss is still considered probably one of the more stable currencies out there.
Yeah, and
they probably do less printing than any of the other majors. They still probably do their own printing.
But what we're looking at is U.S. dollar weakness.
Right.
Not Swiss strength. So when you're buying this, you're not buying into the Swiss strength. You're buying into you're hoping to buy into the Swiss strength of being stronger than the dollar. You're actually wanting to sell this weakness of the dollar. When your main front pair is U.S., if you're a buyer, you're thinking the dollar's strong. And I would always think, like Al said, that the Swiss is a pretty stable and the U.S. has not been the dollar. And the more we print, and we're getting ready to print for COVID, and I'm all for it. I have no problem with that. But that policy in and of itself will dilute the dollar, which will cause it even a little bit more weakness because we're taking on more debt. You're at a very critical line, which is exactly why we're flattening out right now.
Yeah, the body of these candles right now is right where this thing bounced, right at the body of the candles. This is how deep it got into this.
If we draw the line straight across and find the price action point that touches all the way back into 2011, you're going to see that this line, this key area, is right around the 8,700, 8,750 area. And that is a price point. Whether it's going to hold or not, we don't know. But
look at this. Look at this monthly rejection right here. In 1 month, look at the rejection of that right here.
Yeah, that's huge, and that's news based too. That was news based. Yeah. You can actually go back even into 2016 in November, and this in the U.S. pair, and you can almost see where Trump won, where the market flipped, and you can see the dollar 16. Getting stronger because of the idea that Trump was going to come in and.
That'd be right around November 16 right here.
You can see the growth in that month. That's crazy how, if you were watching on the day-to-day in November, you would see that the growth, there was quite a bit of growth going into January. And then obviously the things, the newness and the price is already, the news is already priced into the price point. And then actual government takes over and institutions and they start doing it. But you're also seeing here an M. I don't know if you guys can see that. It's a pretty messy one, but from the point that he started his gold line to where it is today, we have a high point there, and then we had a low point there, and another high point there, and then we dropped down.
Here's our harmonic right here. See that?
Right.
Here's our harmonic.
Al, you just had an IRIS alert, so since we're IRIS.
You did?
Yeah, we did. Let me go over here.
Was it IRIS or was it the arrow?
IRIS.
Oh, there it is. Yep, U.S. Swiss.
How about that?
How about that? That's right.
Blind squirrels can get lucky from time to time. Drop that down to your 15-minute now and see what we got for that.
We have a harmonic, right? Yeah, we basically just drew a harmonic on that.
The big picture is...
The big picture harmonic.
Yeah, the big picture is... To me, this is looking like it's going down. I don't know what the IRIS alert was.
The alert was a descending wedge at 9:15. So let's take a look at that. Let's just draw.
I think it's going to go down, but it's not going to be an easy down.
9:15. Here's the alert.
Question is, do we have enough room?
And we have a little. So here's a high. Here's a low. Here's a.
Here's your wedge inside the wedge.
Well, I'm going to take the higher time frames from, this was from Friday, I guess it was, from there. This was the overnight low over here. Here's the overnight high. Let's move this one over just a little bit like that. So here's our anchor. Here's our hit. We don't have another hit yet off of this. This is still being formed. Here is our alert, and it was a descending wedge, so we're going to be looking at this move coming down. So I'm going to start my A up here.
And it's definitely a middle of the road. I can see it going up, and I could also see it continue its down. It's not in a place where I would go, hey, yeah, this is where I want to be.
I could see where this could be a trap area right from here to here. This could be a trap where it breaks the wedge, it comes back in, hits this trend line, which hasn't been confirmed yet. Look at this as being a possible trap area. See how wide that area is on this 15-minute chart. It could be fairly decent. 16 pips, nothing great. Let's see where our Fibonacci's are. Our 15-minute fib lines. Let's put it on a 15-minute. And we have some fib lines here. So here's our blue, which is this is our demand zone that we pointed out way back from years ago. So here's our blue 15 line.
Isn't that funny?
15-minute, but you can't make this stuff up.
Yeah, it's all organized for the most part. It's either going to be organized by the larger money, or it's just human nature. And if you know what that human nature is, then you can play the game. My
Yes, sir.
gut still says it's going down, but in the short scheme of things, I would not be shocked if it went higher. This is a different type of trading, guys, when you're doing scalping in the morning compared to looking at the bigger long-term overall moves. You have,
Yeah,
and I think Al and the guys who've been in the room have done a great job of doing the precision entry type thing, understanding small risk, go for your small target, and get out. Because that, especially if you're going to be long this, but even if you go short, doesn't guarantee that you won't have a pullback because the market ebbs and flows.
Well, what I would be more, actually, one thing we're finding out, Brian, as we've been doing more of these, rather than doing the breakout trades, we've been doing more of these, waiting for it. We sort of will get a breakout, and it seems like always these breakouts seem to be head fakes, which is really what it's doing, is driving right up into our trap area.
Uh-huh.
It makes it feel like it's going to break out, comes back in, and this would be where to take it short. This would be where to take it long, just because. And I like this because this is a blue trend line that has not yet. Actually, this one has not been confirmed. It'll be confirmed if it bounces off of here.
And would
This
you
is
not
right.
take it short also if you broke below the demand?
Uh, if it
So if you
broke,
broke below your blue trend line where it was
well,
once,
if it broke and came back and retested, yeah.
right,
But
as
it
a
would have
bounce
to.
out.
But I would like to see it break more than just 5 pips or 7 pips,
Right, I agree.
because what's been happening is I mean, oftentimes we'll be able to break. We get that break, and we can maybe just barely get 5 pips, sometimes 7 pips out of it. Uh, uh, but more often than not, lately, we get these breakouts, and then it comes back and stops us out. It comes back up here, and this is the area really to take it. Especially when if we get the break of the wedge, the RSIs are coming down. Now, if these can get all the way down to the 75 area on the higher time frame, yeah, then wait for this crossover and then try and take it. But by that time, it's going to be breaking out the top part here. But when you start trying to go short with everything down, especially when our lower time frames are, when they're down here and it breaks, well, oftentimes we're going to get that. You almost need to get that push on the 1 minute or that little bit of a crossover of the 5 minute, and then have it rehook the second time. That gives us that little M effect on this case, where we have but here right now we have this strong down move. This is more of a W than it is an M. As you look at this, here's the first leg of the. I'll draw it up this way. Here's the first leg of the M, or of the W rather, comes back up. There's the middle of the W, comes back in, retests this area, and then from C to the, and that's why a lot of times that we're looking at, we look at C that from this area, not knowing where that C is going to be, then it goes up, but it goes right up to retest this. Somehow my Siri just decided it wanted to talk to me here.
I'm going to step away just for a second. We have electricians out in the back. I'm going to make sure they have what they need. Give me about 1 minute.
Okay. These electronic devices are great, but they sure have their limitations for happiness.
Happiness, yeah, true.
So, but anyway, I'm looking at a little bit of a W here, and usually from the W you get the bounce from the low. But I'd be looking at seeing this come down, retest this. I'll be looking at this more possibly as the market opens up another 8 minutes. I'd be looking at this maybe come down here, fall into the trap area, and then go long. But then this would be the target. I think it's still going to be somewhat range bound. Don't particularly like this trade. Again, there's just not a lot of range. Now, if you were to take it long down here and short it, then get out up here, you might have enough range off of this green 15, and there's 20 some pips, so that would be enough room. But I think you have a little bit better chance to the upside off of a bounce rather than try and take a breakout. Now off of this low, here's off the 5 minute. So here's the origin of this up move. I can see it come down to retest. It hasn't really been retested yet. This is still kind of a fresh area right in here, which is right below. So this would be of your 15-minute fib line, your green 15-minute fib line. This is really, we can call it a trap, or we could also call it the overshoot of the 15. And look and see where our 5 minutes are. 5 minute lines. Let's see if we can find them here. Here's the 5 minute red. That'd be about right. Let's see how much room we have between here and here. Let's see what that is. That's 19 pips. We could probably tighten it up a little bit more still. I like this is actually a little bit better. This is a 2 minute red. So right here would be, I would be looking at this being the overshoot. Now, if it gets down into this area from the pullback, we'll just move all this stuff out of the way here. Now, the question is, would there be enough room to take a trade to get down for looking for a bounce off of this? And so we'd measure this from, here's the high of that candle. This candle's still red, or actually it is red right now. So that's, you would have a shot at 7 pips to the blue line. Here is our alert. Just take all this stuff off so we don't get too confusing. Here is the alert. We could probably pull this one down here a little bit tighter. Pull this one down a little bit tighter. Here is the alert candle right here. And again, oftentimes we're seeing as we get the alert at the candle that this was the candle that opened up right here when we got the alert. This is right at 9:15. Let's see if it can come up and it's bouncing right off of the 30 minute 62. We have a blue candle right now on the 15 minute. If that 15 minute blue candle can turn, oh, it's on the 5 minute. That's on the 5 minute chart in this regard. Let's see what it looks like on the 15. Looks like it's still red on the 15 minute, blue on the 5, blue on the 1 minute. Here's where the alert was off of. There's the low just before the alert. And this could be the possibility the retest of this wedge right in here. So if it broke, coming back up to retest, coming up here, retest the 62. Here's a little basing area right in here. If you wanted to take it short, you could take it short with the close of the spread candle here, but have your stop up here by the 62. And there probably would be enough room to the downside on this.
So what did we end up doing? Breaking down?
Well, what it's doing is we had the alert, we had the wedge, tighten it up as close as we can. It broke, and now it's coming up to retest the wedge. We have a red candle here. We still have a blue candle off the 5 minute, and we have a red candle off the 15. So right now, this is sort of like right now, this area right here is the retest of the breakout of the wedge.
I just think it's going up. There's just so much uncertainty. Let me look at another thing here. Whew. It is cold outside. Ugh.
How cold is cold? Just
Well, for us, it's 38, but
That's
for
cold.
us, that's pretty cold. And
That is
when we have sunshine at the same time, cold. Early mornings are really kind of a biting cold. And then in the middle of the day, it's like the sun just warms it right on up. But right between 9 and 6:30, that sunrise time, if it's been clear skies overnight, the cold is a biting cold, and the electricians are out there in the gloves. I'm thinking, good luck on that.
That's
But
close to what we have right now. It's about 35, 36 here.
yeah, it's cold for us for sure. But it's supposed to be 70 degrees, I think, tomorrow.
Oh.
Yeah, I was thinking about trying to play golf tomorrow. Maybe, I don't. Who knows if my wife will let me or not? But the weather's supposed to. I got family coming in too, so I probably won't be able to do it. And then I think it's Tuesday night, Wednesday. We're supposed to have a big change, which will be in the 50s on Christmas Day, which is for us that's just below average. But
Don't forget to get out and see the Star of Bethlehem tonight, guys.
yeah, I was looking for part of it last night, and I got out on my deck, and it was just a little bit too light out still. Pretty amazing stuff.
Yeah, I think
Gum.
Is that like an every year type of thing?
No, this hasn't happened in 800 years from what they said.
Oh, really? Ooh.
Yeah.
Yeah, I'm not. I think it's pretty cool. I don't know exactly if that's really the Star of Bethlehem, but it's probably as close as we're ever going to see the real one.
Yeah.
My gearbox has gone crazy. I'm trying to look at my US Swiss on this thing at the same time. Crazy. A lot of profit taking for some reason. I haven't done any of it. Yeah. Let me refresh this real quick as we're waiting, looking for US Swiss. I'm not in anything US Swiss. Ooh.
And we're right at the market open right now at 9:30.
8:30. Yeah, I didn't have the bell ring. Ooh, gotta get my hands aren't even working on the keyboard right now. But I also walked out there in shorts. I told the electrician, he said, well, you're out here in shorts. Of course you're cold. I said, well, one leg I can't feel, so it doesn't feel, I'm not cold on that leg. Which is true. My left one, it's not cold. My right one is, though. Yeah, I've had 2.6% return today on Gearbox.
That's all right.
Yeah, and since November 30th, 15.67.
Yeah, that's good.
That's solid stuff.
Yeah.
I can't complain. I'm doing it on the 4-hour chart. I'm looking for the US Swiss information, though.
Right now, this thing is looking like it still wants to go short. Here we got.
That's kind of what I was just
still going down. If I get close below the 30-minute 62 on this 1 minute, it may be worth taking it short. Then using the top of this pullback here as your stop. Because if it's going to break down, it should break down pretty hard once it gets here, and this does not be an issue.
And your hole is only green on your 1 minute chart. Your 15.5 are all red, which does look like it.
This is still looking like it wants to stay down here, down below. We had a nice little pullback up here.
Excuse me.
This is more of a traditional breakout of the wedge. You have the wedge, you break it out, comes back up, retest the wedge, and you can see it's actually forming another little secondary wedge right in here on this pullback, still respecting this trend line, which was basically formed by there's the B, the D. Let's see something here. You see, if you took this thing short right when it broke here, I mean, you'd still be thinking of, you'd still be sitting there burning up emotional inventory, trying to figure out, okay, now should I get out? Should I stay in? Should I get out? Should I stay in? Here's our 15 minutes. So here's this is our range limit, range right in this area. Here's our blue. Let's see what time frame we have here. That's the 2-minute blue. Two-minute green, 2-minute red, 2-minute blue. And then 2-minute blue means that should be a 5-minute something. 5-minute green. And on that note, that's about all we have. Really nothing to speak of here.
Not a whole lot.
Again, we thank everybody for coming in. We'll be back tomorrow morning. I should be around tomorrow morning. Then I'll be not available for the next few days after that. And I'll try and be back here on Monday. I may not be back Monday the 28th.
I got you covered.
But Brian says he'll be here. And but anyway, stay warm, be safe. We'll see everybody tomorrow.
See
Good day, everybody.
Good day, everyone.
Thanks for coming.